Hello traders, and welcome to another video review, and happy new year 2024. Today is January 2nd 2024, first day of the real trading on the financial markets. The liquidity is back, volatility is increased, so let's just dig in to see what is going on with the economic calendar events for the Forex market for today. As you can see, I got the only most important ones for today. One of them was the RBA interest rate decision announced earlier today. The other one is scheduled for at least 5 to 10, and this is the Germany manufacturing PMI data, together with the Eurozone manufacturing PMI data, which are scheduled for release at 10 o'clock. And 30 minutes later, we got the manufacturing PMI data from the UK as well. So those are the most important events for today. So we are starting quite slowly, but still there is something that might take that traders might take into the account. But let's just dig into the technical part of our meeting. Let's see what is going on the currency pairs. We are going to start with euro dollar first. So this is the euro dollar 4-hour chart, and as you can see, the bearish divergence between the price, which is making new high after the cup and a handle pattern was done, and the momentum, which is making a lower high, is actually paying off very nicely. We got this movement to the downside towards the technical support located at the level of 1.1018 and 1.1008. So that's like a 10 pips wide zone for the traders. This is of course the demand zone. It was tested twice and then was tested for the third time and broke finally as the cup and handle formation was done. We identified this formation way before the handle was made. So congratulations for all of the traders who actually were aware of this situation and did something about it. Now we are going down, of course. We're testing the technical support, and it looks like the market is ready for another bounce. When the volatility will increase, the market can bounce from the 1.1018 level and of course rally towards the last swing high. The last swing high is 1.1140, and 10 pips away. 10 pips away, there is a next target for the bulls, 1.1150, which is the technical resistance from the 2023. As far as I remember, one of the swing highs. It's kind of an important one, but it's not the very major swing high. Nevertheless, it will act as the technical resistance. Momentum wise, we are trading below the level of 50. 45 points is the RSI right now. So if we apply this slight line here, horizontal line at the level of 50, let's say we are doing this somewhere here, let's say, you can see that we bounce from this level of 50, almost bounce from the level of 50 at least 2 times, and then we got the breakout to the downside. So of course there is still opportunity for the bears if they will increase the pressure and the 1.1018 technical support is broken. Then of course we might even test 1.0967 100 periods moving average level. Alright, the key technical support is still way below the lows of the cap formation, so we don't need to worry about it yet. It still looks like the upside is being maintained, and our price range from the recent swing high, it was made apparently last year, 28th of December, to the recent low is only minus 1.11%. So it looks like the healthy correction. Nothing to be worried about just yet. Let me just find out. Oh, there you go. Another comparison of the price between this, let's say, movement to the downside. It's almost identical. 1.10. Minus 1.10, minus 1.11, so we might have equal corrections during this up movement here, so they might act as the one-to-one corrections technical pattern, and we might see some sort of the rebound towards the last swing high at 1.1140. So the euro dollar looking right now for a bounce from the support. What is pound doing? Cable, British pound to American dollar for our chart. As you can see, I got my labels here. We got the swing high at 1.2826. Then we have the movement to the downside. It seems like this line doesn't actually works very well. Market doesn't respect this line, so let me just get rid of it. And there was a bullish engulfing pattern, of course. A very nice movement to the upside. We still have the key technical support located between 1.2450, 1.2430, so 20 pips, a key short-term technical support. For now, as you can see, you are now balancing, zooming, hovering around this old internal trend line support, bouncing up and down, just as we do on the RSI, bouncing up and down around the level of 50. So neither bulls nor bears are in charge of this market, and to be honest, the market participants hasn't decided yet which way they want to go. So let me just mark the intraday zone. 1.2699 is the intraday technical support. Let me just move this one, and let's say 2826 is actually the key technical resistance and the swing high. So in that situation, the intraday technical resistance is located at 1.2771. So that's the outlook for the British pound. Not too many changes here. We can leave our scenario of potential upside development on the table. Just do the screenshot and we are done. US dollar to Japanese yen. This market keeps moving lower. If we zoom out, we can see the last swing high. 151.92. We've been moving lower quite strongly. We still got the key short-term supply zone. This supply zone is marked on the chart roughly around the 144.96 level, 145 to be honest. That's the key level, and we keep making lower highs, lower lows, which is the definition of the down trend. Just recently we bounced from the 140.83 level just after we've made the another swing low at 140.27 into the extremely oversold market conditions on the 4-hour time frame. We can apply our, let's say, RSI zone, let's say, at the level of 50 as usual. I'm just trying to do it. There you go. Very nice situation here. We've been rejected once there is this correction, new low was made. We've been rejected second time, and then we reversed lower. So now it looks like the key intraday technical resistance is located at 141.87. This is the level that must be violated in order for this market to rally higher. So that was the US dollar to Japanese yen. Let's take a look. Maybe we should take a look at the crude oil, because the crude oil is actually doing very interesting things. If we zoom out, we can see that this movement to the upside has ended with the dark cloud cover, and since then we've moved below 50 and 100 periods moving average, just as our arrow indicates. So there is still a bias towards the downside as the downtrend is being continued. Okay, so that movement from the lows at 67.77 that ended up with a hammer was a corrective in nature, and right now we are moving even lower. Let's just find out if there is any Fibonacci retracement level that we just recently hit. So from the lows of the hammer to the highs of the dark cloud cover, roughly here, we didn't actually hit the level of 61% of the Fibonacci retracement, because it's at 70.92. So there is still a chance. Let me make it black so you guys can see. There is still a chance that the market participants will hit this this level. This is 61% Fibonacci retracement, and then there might be some sort of the movement to the upside, and then the downtrend will be, of course, continued. For now, it all looks like a reversal, dark cloud cover reversal, and then return to the down trend on the crude oil. We almost hit the extremely oversold market conditions. The market is trying to bounce, but those levels were made during the low volatility, low liquidity times, just before the year's end and just after the New Year's Eve. So don't pay that much attention to those movements as they are made during the special market conditions. And very briefly speaking, we might see return to the downtrend very soon on the crude oil. Last one, Bitcoin, just shortly. Let's take a look at the Bitcoin. We got new yearly high on the Bitcoin. So what is going on here is that we broke above this very nice zone here between 44,555, 44,800. We've made the local and swing and new 2024 high at 45,923, and we are heading higher. So that level was violated. Let me just make the notice here that those levels are extremely overbought, and the market conditions on the 4-hour chart are extremely overbought. But if we switch to daily time frame chart, we can see where is the next target for the Bitcoin. This blue line is the next target, to be honest. You can see it here. This blue line is located roughly around 48,200. So that's the next target for the Bitcoin. This is where we are heading. There you go. You got the blue line on your screen. Let me just move it, let's say here, and now everyone can see that we are moving higher towards this blue line. This is the target for the Bitcoin right now. Looks bullish to me. We need a test of this zone here, which will now act as the demand zone, and then of course another leg to the upside might be done. That's everything to the of the first new fresh analysis of the 2024. Thank you very much for watching this analysis. Give me a like, give me a thumbs up if you like this kind of analysis. Subscribe to the channel to stay up to date with all of the key events on the Forex market and the updates of the technical analysis. Thank you very much for watching this video. See you guys next time. Take care. Bye bye.